how do each of you actually see the way, in your respective arena, where you stand and what you see as, the way you are approaching this, uh, the way sustainability is being measured. How do you look in terms of, ensuring that there is a better grip on sustainable, shall we say, sustainable finance? So if we can begin with some opening thoughts, we can do this.
Yeah, I think what is most important is there are many solutions on sustainability, but I think what is most important, according to me, is how do you measure sustainability, right? I think what gets measured will definitely get the attention, right? And I can just start by giving one or two examples, right? Say, for example, today, if you are ordering something online, and if you have an option saying that if the delivery is in 1 day, such will be your carbon footprint. If the delivery is in 3 days, such will be your carbon footprint. I believe the probability of you being okay with 3 days would be much higher, right? So it's very important, according to me, to have a measurement in place. There are many initiatives happening on sustainability, but the measurability part of it, is very important.
So that is Mr. Rishi Arora. I think since we are recording and there's a faceless element there, you can just say the name and then start.
Yeah, hi. This is Nikesh Gupta from Aditya Birla Capital Finance Limited. My response is very strictly to the finance industry. I look at it three ways. The basic pillars of ESG are basically three. Pillars are basically people, process, and the product. Okay, so it floats around it. So for a financial industry, whether it's a bank, lending institution, they have a big role to play. One, they can cater to a society or the segment which are encouraging in this, which are working in this particular segment. Or second is the financial inclusion. You look at, I call it JAM, Jandhan, Aadhaar, and mobile. The trinity of that works wonderism, right? The way the data analytics and digitization can help on the microfinance industry. It's directly addressed to the bottom of the pyramid. You will able to know GST data. GST data is doing wonders. Earlier you need at least 5 years. Customers, bank statements and all. He will bring 2 kg paper with you, and then you will decide whether you want to lend it or not. Now in GST data, you can look at now 5 year GST is old. You can get it, with their buyers, suppliers. You can take a good credit call on that, and it is a very well informed call. So that is one of the ways, in financial industry, that kind of intervention is happening, and it is quite disruptive in nature. But it's I think we are scratching the, just surface. Too much work is required on this. Analytics and big data has a big role to play on this. This is what my opening remarks.
So, Roopa, since as was pointed out just now by Nikesh, the external entities which have, like for example, JAM and this GST data, are these also the measurement issues? There is room for further fine tuning, or you think that we get a better picture on that, just so as to
Yeah, before actually we have jumped into one aspect of it, but just to step back a little bit and to set the context a little bit. So because there are multiple angles to this entire topic of sustainability, I think. To introduce myself, I am Roopa Satish. I head the ESG practice in IndusInd Bank. What I am seeing is that globally the flow of capital is changing as the world is discussing this whole issue of climate sensitivity. The awareness about ESG issues are increasing. So I'm seeing customer preferences changing, business models changing, flow of capital changing, and regulations increasingly changing, which is forcing which is forcing businesses, banks, financial institutions to relook at the way traditionally they have done their businesses and try to see how they can contribute to reducing their own emissions. And that is where the context of data becomes very important, because only what is measured can be reduced. And of course it is only one of the challenges. There are multiple challenges. There is a challenge of taxonomy. What is it? Is our understanding all the same? Because different people understand sustainability differently, and therefore India is still working on a common taxonomy in this field. Europe is ahead of the curve a little bit, and they have put in place standards which are well accepted and well defined. So that first the definition is there, then you start putting together the data according to the definition of what you want to measure. Then you start tracking, measuring, you take targets, then you reduce. So it's a journey. I think there is but no choice for banks and financial institutions to lead in this journey, because we have a very important role, because we decide the flow of capital in the economy, and what private investments are going to happen will depend upon whether banks are ready to finance a carbon intensive business, or do they want to protect themselves from future climate risks and go towards more carbon friendly businesses. So I think there's a transformation happening in the entire country, as India has also stated its goals very clearly. And as the economy prepares for a transition, each of us in our respective fields will have a role to play, both from data assessment, as well as the manufacturing industry, as well as banking industry.
Yeah, so this is a very important point. Actually, it goes further to actually what was said. Now we said that there is no choice. There are factors which are driving us to actually seek measurement. But a quick thought on measurement, when we talk it, you mentioned some points.
Data is a huge challenge. Data is a huge challenge in this space. We are trying to put together, for example, when we talk about emission reduction in the bank, for example, in IndusInd Bank, we have taken targets and we have been measuring the emissions, carbon emissions of the bank, and the emission intensity, which is emissions per crore of revenue. How much is that? And we have taken targets for reducing our emissions over the next 5 years. But data is a huge challenge, because when you go down to the actual departments which are consuming electricity, where the ACs are there across 3,000-4,000 branches, how do you really measure how much energy is consumed, how much our own vehicles, how many bank-owned vehicles are there? So the data capture is itself a huge task which needs to be automated. Today it is done in a very manual sort of a manner, and then it is to be reported. SEBI has mandated that the top 1,000 listed companies now have to report, along with their financial performance, certain sustainability related metrics as well, and emission intensity is one of that, as per the task force on climate related disclosures that are there. But is the industry ready? Is the industry able to measure and track emission reductions? It's a billion-dollar question right now.
Yeah.
Yes.
No. Okay. So good evening, everyone. This is Dipu here from Bajaj Allianz General Insurance. I thought I'll just bring in an insurer's perspective as well, on sustainability and digital innovation. We've been hearing a lot about, measurement of, areas, concerning sustainability, and that's where technology comes in. For example, to the point that some of my co-panelists made, in terms of how do you measure when, people are using, carbon emitting products, in the office. That's where technology comes in. So, for example, you can have sensors, right, which can basically do an auto off or an auto on. And similarly, when you look at cars, right, this whole movement towards electric vehicles, right, I think that's again an area where technology can bring in a green revolution. So that's one thing which we have seen. Again, coming to an insurer's perspective, if you look at the claims we pay, we normally pay claims which are through the normal course of business, and we also pay for what we call national catastrophes, right? When you have floods and earthquakes and events of great magnitude. Now these black swan events, the magnitude has been increasing of late, and that's also attributable to changes in climate. And climate risk, is one of the top risks from an insurer's perspective. So that's why you also see, a slew of products. So for example, you see in parametric insurance where it's trigger based, right? And you're also seeing use of technology, for example, in terms of IoT, right? One is IoT sensors at home, which can help you prevent, accidents. Similarly, IoT in vehicles, right, which can also help you, measure and manage the whole, spectrum. And also the usage of drones, for instance, in agriculture, right? When you look at large areas where you need to, assess and measure crop claims, the use of satellite imaging, the use of drones, right? These are, factors by which, technology is coming in. So I think technology from a micro perspective and a macro perspective, has a very important role to play, in terms of understanding, measuring, and also coming out with sustainable solutions, going forward. Electric vehicle, for example, might sound, like a very simple, shift at one level, from the current way of driving vehicles, to this. But then, look at the way, your parts get replaced, right? I mean, and we've also seen, unfortunately, some incidents, right, which we'll have to manage going forward. So I think, we are set for interesting times, in the years to come.
Hi, this is Naveen from Yes Bank. I head the digital payment, so I want to digital banking also. So I want to bring in some parts of probably what could be done in digital payment space so that one of the questions that we have put on table, that how can we collect the data. So right now, if you see, when he talked about carbon emissions on the vehicles, right, we should all acknowledge that we have done the first step by introducing something called as a FASTag, which is a NETC, wherein we are definitely seeing that the stoppage time at this toll plazas have come down, which definitely would also mean that some bit of it has also helped us to reduce carbon emissions. Then obviously the next step that NPCI and RBI and other banks are working on is how do we actually replace this FASTags with automatic number plate reading system. So the technology introduction is happening in certain bits where bit of it is also leading to some bit of carbon footprint emissions, reduction in carbon footprint emissions. The other thing that I also wanted to tell is that when we are talking about measuring something which is happening on the electricity payments or payments towards certain utilities, we also have to realize that we have again taken as a country the first step in terms of setting up something called as a Bharat Bill Payment Services, right? So when we have this Bharat Bill Payment, which is currently limited to transport only the transaction related data, can we actually leverage these particular rails to go beyond this and actually measure the data which is required for institutions or individuals or MSMEs, whoever are practicing or using this particular BBPS as a payment platform, can they actually go ahead and use this data to measure the carbon footprint. So I believe, like he said, JAM is the first step probably we have to talk about financial inclusion. But if we go ahead and if we see when the financial inclusion has to happen, now going a bit away from the other environmental related sustainability issues, sustainability would also mean inclusivity. Degree of inclusivity in the entire financial ecosystem also has to increase. JAM is the first step, but like you rightly pointed out, core systems are probably prohibiting financial institutions to offer the financial products at a margin. Without use of technology, that cannot happen, which means if you have to look at micro products, micro assets, micro loans, micro deposits, everything, as a banking ecosystem, we will have to relook at our core, which can offer these at a cost which is sustainable for bank and also sustainable for the ecosystem to enhance the inclusivity. And that's how the sustainable growth is possible. We cannot have the sustainable growth only focusing on the top tier of the economy.
Very important point. So Suhail, when there is low financial literacy and there is need for financial inclusion and there is also the need for customized products for that audience. So therefore, points that he says, therefore, other than into any other perspective that you have.
I think, as we said, there are a couple of points here. I mean, one is, hi, I'm Suhail Ghai. I'm from Max Life Insurance. I think one of the key areas is that as we're looking at the financial inclusion, the idea, as he said, is also to how do you bring your products accessible to a large population. Now, life insurance is typically a complex product, and typically it is a little up in your hierarchy of your needs, right? And therefore, how can you make the product simpler? How can you sell it together so a couple of initiatives which now the IIDA is taking is trying to bundle the products together. You don't need to have a separate life insurance product, a separate health insurance, and a separate property insurance. How can you have a composite product, and you can bring it all together and also standardize it so that it can be sold really to the masses. Second is also how can you have a very different distribution channel for executing it. We have seen industries like FMCG, ITC, Hindustan Unilever using rural women, educated women to actually sell some of the products, this like Project Shakti and all, which happened many years back. I think this is one area probably where financial services need to learn. And today there is a push right from the regulator to all the companies. Is actually, it's called Bhima Vahak. How can you make this available to a large set of people? And therefore, probably they say the 100 years of India's independence that every household has an insurance policy. I think second big thing that he said is that how do you make these things accessible? Also, your cost of these products. How do you simplify? Another product have simple features. Not everybody needs everything, and have standardized features. Have things like today, thanks to this ecosystem in this country, what we call the India stack, whether it is KYC, whether it is health records. As today, for example, account aggregator, we already have 14% of people who are using this opportunity. Now, as these things become larger, your DigiLocker, account aggregator, a lot of the need for paper, a lot of the need for processing will go away. And this all adds to the cost of the chain. And therefore, your operations become leaner. You can price it right for a larger segment of the society, and that's inclusion. Secondly, second perspective, which I when I started talking to you about, is about the whole processing. We used to live with tons of paper. So everybody wanted a life insurance. You ask your income tax records. You were self-employed, your GST records. Then tons of paper around it. Then this was first when you were onboarding. Then you were underwriting your health records, health statements. Today, thanks to the integration in this country, both from a government perspective of the India stack, the financial bureaus, the health digitization of health records, most of the paper is gone. 70% of our policies, we don't even take a single document. And I think what is also this helps you obviously in the carbon neutrality, also makes the whole operation leaner and paperless. And I think this is the way to go, and this will also reflect back in the cost which a consumer pays.
Very interesting. I think very great points. Hi, this is Shalja. I'm a part of IBM. I was just going to kind of address this, the G20. Okay, India is a part of the G20, and it's very unique, India's position. When we look at the carbon emission footprint per person, it is about 3 tons, which is the lowest amongst all the countries. The moment we look at carbon emission per kilowatt of electricity generated, we are the highest. This is a dichotomy. It's the same carbon emission, but it is paradoxically different. And the reason is 2/3 of our electricity is basically coal-based. And because it is coal-based, that is the reason we have these emission footprints, which is per kilowatt very high. And coming back to what you were saying in terms of lending, 10% of the country's lending today is towards the power sector. So the fact that we can step back to what you were saying, Roopa, not lending or lending only to sustainable is not something that we can afford at this point of time. And that's why we have to kind of step back. We definitely need to take the transition to move from coal to coal plus renewable, and it will gradually happen. So that's definitely one of the reasons why it is critical for our company, for our country to actually be coal based plus renewable based, and the government is taking the right steps for it. On the second part which you talked about, in the measurable part of it, financial reporting is very concise, precise. You know exactly what needs to be reported. There are templates, formats, and all. The frameworks, the BRSR, the ISO 26000, the SASB, there are plenty of frameworks across, and these frameworks actually crisscross each other to the extent that the amount of information that's been asked, the amount of documentation supporting that needs to be done, the statistical information that needs to be gathered, uh, is is paramount to actually coming to that sustainability index or that score. And for example, Tesla, MSCI did a score. The rating for the ESG was a 7.1. SAS Analytics did a score. The scoring was 3.9. So it's very, as you said, there is nothing. We're still maturing, and currently where we are, definitely reporting is of paramount importance. It has to be financial grade. It has to be something which is totally auditable. It has to be something which you can kind of cover for a period of time, which is compare it with what was there yesterday, what is there today, and it needs to be obviously audited, and that's where I would like to talk about uh, the need for a comprehensive software, the data and the analytics piece of it for sustainability and energy. And it should be accessing all frameworks. That's point number one. Second is it should be accessing all templates which are there for compliance. Thirdly, it should have an integrated portal capability. So across the value chain, it can give the right reports, publish the disclosures. At the same time, it should be integrated with the energy stars, and it can give the score. So the energy stars is primarily for scoring, and the most important, the data collection piece. So it's that automated data collection, out of the box tools which give it the S1, S2, S3 emissions. What are they? What is the water consumption? How is the emissions going to be calculated? All this is important. And given the fact that you're talking about the banks and the financial institution and insurance, the number of places which all are there, it should actually be able to integrate with the building management system, right? Or with the facilities or with the real estate, where you can actually count the floor space, you can actually count the footprints, you can actually count the energy, the ACs. These are part of the automation that needs to be brought in. There are tools. I think I'm not sure if IBM has acquired a company called NVZ, which is there as a part of the reporting management primarily for the ESG. So these are the things which are important.
I think very important. I think when you mention this point, and as I gather from what we have said, and in fact it was discussed in the earlier panel as well, with the use of technology, one is getting into a phase where data will start to replace collaterals. That you are able to identify exactly, saying that who is the right borrower, and therefore it will help. But does this also, if that is the arena, then does it also ensure that we are more sustainable, or are there challenges in that? I mean, that's the path we are all taking, right? That's the path we are all taking. We are getting a better fix in terms of whom to lend, or who to give. But how do we therefore at the same time also ensure that this is from a sustainability point of view also the right thing? Will that therefore mean that we need to bring in some added components to analyze this better, or that's any thoughts on that?
Okay, so I think what Shailaja spoke about, one very important point. See, what we are talking about today is, how can I start reducing the footprint by adopting technologies, right? So, for example, if I talk about asset management systems, how can I make my assets more more efficient. Yeah. So we are all talking about making our current setups more efficient. I think all organizations are working on it, right? But I think what is also going to happen going forward, right? And climate risk is the biggest risk I think we face, today. Yeah. Point about She spoke about a very interesting point on footprints, and how can we so how can we leverage all of that, right? Yes, it will take some effort, but how do we leverage the footfalls which are happening? How do we leverage our vast geographies, right? From how can we leverage our natural resources per se, and think of programs which will make a real difference to this world. And I'm just going beyond the standard solar. A lot of organizations are working on solar panels. A lot of organizations are working on asset becoming more efficient. I'm just going beyond that to the point which I made in my presentation, innovation. I think there are a lot of ideas which are going to come through, which will start making a real difference to the way we are, not only operating but living our lives.
So Nikesh, not just about, I say, from what I gather, not just about reducing the costs or reallocating resources and moving from, let's say, fossil to renewable, and thereby better balance sheet impact, but much more innovative in the way we are handling it.
Yeah.
If I've got you correctly.
Yeah. So I just tell you, I tell you a very interesting piece, which is not yet covered. Regulator also has a very big role to play. So before, what my current role is, I was the global trade head in Citi. So what we did when Mr. Modi came into power, we had an opportunity to show what digitization can do. So for every export and import, there used to be huge, bulk set of document which called bill of entry or GR forms. It has been replaced. So what happened? Whole ecosystem has changed. Regulator is bringing big role to play. Earlier, shares were in materialized form, physical form. Now it's a demat form. So what it has happened? Paper is gone. So the number of, I give you example. There was a team, we used to run one process with 1,000 people. Now that same process is run by not even 40 people. And what my organization are doing on the people, process and the product, on the people side, a lot of training effort is going on in sustainability in a true sense. So we are part of a very large conglomerate where examples are being shared from manufacturing to financial industry. What you can do. So the company and the office are moved to where ESG is supportive. One other thing is the senior people are buying cars and all. They've been encouraged to buy electric vehicles, and they are giving some kind of incentives to buy electric vehicles. So these are the small things, but these are very material, tangible effort is going in that direction.
Very important point. Roopa, quickly, if you can just, so that we can add a bit on this. Where do you see as currently the challenges in this sustainable finance?
One big challenge I feel is awareness and capacity building, because all players are not at the same level of understanding. In the Indian financial industry, you have diverse players. There are government-owned banks, there are private sector banks, there are foreign banks. Each one has their specific challenges. But one challenge I see, which is common across, is that there is a lack of skilled resources. It is a new field. One needs to skill and upskill oneself. I recently completed a ESG certification, CFA certification in ESG. So I'm 52 years old, but there is no choice. If you have to stay relevant, you have to upskill yourself. You have to learn, and you have to have a step or be a step ahead of the others. And only then you can really innovate, because innovation requires creativity. It requires it requires doing things, thinking out of the box, right? typically traditional industries like banking, you just keep doing what you have always been doing, and there is enough to be done anyway, and there's a market out there to take your products. But I think it's interesting times, because when you combine technology with sustainability, the breadth of solutions that you can bring to the market increases dramatically. We spoke about ecosystems earlier. The ability to create ecosystems, which means to bring partners who are not just banking solution providers. If you take healthcare, you mentioned that, healthcare is an area that, so if you take healthcare, you can connect all the players in the healthcare industry digitally and address requirements across the value chain. So value chain banking has become the norm, where you give capital to a social impact industry like healthcare, which requires funding, but at the same time, through digitally, you ensure that your financing is not just a very traditional form of asset-backed lending, but you are able to chase the transaction flow. You know that this guy is now going to get an insurance claim, and therefore you can fund it because it is captured in your digital ecosystem when you partner with everybody in the ecosystem. That is one example. And the other thing is, we spoke about inclusion. So digital solutions have changed the game for MSMEs and drastically improved their ability to access credit. Before we started the discussion, some of us were discussing the impact of GST and how it has helped as MSMEs access credit. It has changed lending models. Secondly, data is now available through multiple sources, so that you can do advanced modeling and prepare industry-specific credit underwriting tools, which are designed for that particular player in that particular industry. And you need not apply same standards of credit judgment across industries. You are able to fine tune, and you are able to innovate and customize. So the movement, like you rightly said, from asset-backed lending, where you have to always fall back on the collateral, I think digitization is certainly changing that positively.
Mr. Dipu, your thoughts on that?
Yeah. So this is Dipu here again. To the point that you asked about, data as collateral and, what are the potential risks and, how do we address them, just a few thoughts. Firstly,
Trying to ensure that it's sustainable.
absolutely. So firstly, if you look at us today as, consumers, we unwittingly, give away a lot of data. We leave a huge digital footprint behind. I was speaking to, one of the ride-sharing services, firms, right? So it's very simple. They see a particular person booking a taxi every day from near PNC Road. So they obviously know, what is his net worth, right? And then they can immediately give him an offer, in terms of, a loan, or any financial product. Similarly, when I, before COVID, when I went to the US to meet some startups, I figured out that 90% of their business model was take an inch, give a mile. You just give them one piece of data, and then they scout the entire ecosystem, because customers give a lot of app permissions. Their data is lying in a lot of multiple third-party databases, and they complete the customer's picture for you. So that way, data is given. We also spoke about how, for example, when GST happened, a lot of SMEs and MSMEs, suddenly had access to a lot of data, because now you have to start giving, invoices to get credit, right? So suddenly they came from an informal system into the formal system. So data is available. Data is the one which is used. Similarly, if you look at cash flows, right? You can use that data to, start giving out loans. So data as collateral today in myriad forms is pretty much the norm. Now, what are the potential risks here? The risks are one of fraud. We have already seen articles in terms of how GST frauds have happened. Similarly, it's not difficult for people to impersonate, right, when they figure out that this is the route to getting access to financial resources. And the way to mitigate that is obviously to leverage pattern analytics. If you look at a lot of anti-fraud firms, while they don't give away the tricks of the trade, but they look at a lot of pattern analytics to figure out, how to, figure out potential fraudsters. Now, from a sustainability, perspective, where this comes in is, for example, if you look at insurance, specifically, IoT, I touched upon that before. Now, what happens in IoT, Internet of Things, is, when you place a device, right, suddenly you expand, the universe of insurance, right? I place a device in the car, I call it connected car, telematics. So that's again, product which is offered to customers. You place a device in the home, it becomes connected home, right? And similarly, you have seen, the use of, wearables, right? So that's where, connected health comes in. So when you have this connected ecosystem, coming in, one is, you're able to get data at a far more granular level. And why that also helps, create sustainability is, one is the point that I made earlier, that, in the case of offices, right, if you start measuring and you have devices, automatically switching on and off, right, you can reduce your carbon footprint. Similarly, when people become much more conscious, right, to the point that, Rishi made earlier, right, that if you're able to, tell people that, this usage can lead to, this, and if that can be tracked through devices, at a micro level, everybody becomes more aware and they start tracking, then you can create that movement towards sustainability. So that's how, these two go together.
Yeah, so one of the things that I think is very important is that lack of awareness today on this subject, or everyone knows something about ESG, but they don't know what is their role that they can play towards this particular sustainability, right? So if I look at product managers in 2000 or 2000 to 2010, most of the product managers focused on getting the functionality right. And then they realized that there is something called as a cyber risk. And in the last 10 years, probably the second generation is all about managing both functionality plus cyber security. In the same way, now that we understand that these particular products that we are building, whether it is a financial product or whether it is a technology based, any product that we have been talking about in the last half an hour, if there is a simple awareness that is created in the product managers that ESG is also very important, or sustainability is also very important, then the design aspect itself can take care of few things like data collection, data transportation and data retention, for the purposes of making sure that the products that we are building are not only offering functionality, not only taking care of the security, but also making sure that the products are offered in a sustainable manner to the ecosystem. This is what I think is very, very critical for us to build a simple awareness, so that the future products are very, very well-rounded and not lacking any aspect of sustainability.
I think many of these challenges are common to all of us. I think one big thing is we also realizing that for you, a lot of the use of data is based on digital footprint. Now India is two Indias. One India is very digitally there and you have everything, which is digital. And the other India, which is still not fully into formal economy, there are not many digital footprint. Now obviously because of Aadhaar, the identity part is taken care of. But financial inclusion is still not, a lot of it is still the cash economy down the line. Now how do you bring that into the picture? Because you really want to be sustainable, you want to go down, you have to bring that cohort into your system. I think that is one big challenge. Second challenge we look at is that sometimes we have a lot of data, you don't know what to take out of the data. We have IoT devices, we all have products where we can track number of steps, what people are doing. We will have products which can give you discounts on your premiums if you're this thing. But how do we leverage this data? How do we make data valid back for the people? Like, many of us do medical tests of our customers. Do you offer them in return something? So I think there is also, how do you make sense of this data? And I think third is we have seen during pandemic, a lot of places where there were physical interactions, people started to go virtual. And especially when you're in the business of financial institution, it's money. Money is trust. When you want to give somebody your money to handle in savings or anything, you want to meet a person, you want to know who's this. A typically agent or somebody was your known person who came through, somebody whom you knew. And now when you are investing money remotely, so how do you create trust without having to be physically there? And I think that's another big challenge, because by nature, we could tend to put our money where we know somebody. And there was physicality of a branch, physicality of meeting somebody. And I think that's another big challenge, that if you really want to become truly sustainable, then you will have to sell a typical financial complex product, you need 4 to 5 meetings. First you meet a person, you create a business case, you go back to him, he will give you some documents. Now how do while some of them have been taken care of, like document chases and everything else, there is still that the first few meetings, and I think that ability to create trust without being physically there is another challenge which this industry needs to solve too.
Sharja, if you have anything to add on this, most welcome. But otherwise, my last point is essentially is around when we look at the sustainable finance now, how do we break down into, let's say, a year or so in the interim, in the medium term? What are some of the things which we immediately need to attend to so that we get a better fix on this?
Okay, just to kind of
Conclude the earlier.
no, not conclude. I'm talking about what you only said. So I think today we all call sustainability a boardroom discussion. We are talking about short term. It's a tick in the box. Okay. Now, can sustainability be sustained at a boardroom discussion level? It cannot. And I think the reason why it needs to go much beyond that, your entire objective is to achieve your measurable ESG impact. And it has to be alongside financial returns. Without financial returns, it will actually just be a boardroom talk. And that's where, there are changing business models, not just, elsewhere. There are European business models. Here, we are very innovative. Very soon, we'll find a lot of things which are coming way beyond what is there, just like we have our UPI, etc. I think it's just a simple thing to do. Like, for example, an oil refinery wanted to have a thrust into renewable energy as a focus. What did they do? They did tie up with the McDonald's, frying oil, the waste reduction, whatever fats are there, get it collected. So the partnership with the McDonald's, partnership with the transportation company, getting it to them, refining it, processing it, making it diesel, selling it to a truck company, partnership there. The next step can probably be a blockchain. It's a value addition for them. It's a business model for them. It's revenue for them. So that revenue is imperative. So unless that revenue can be sustained, sustainable is not something which is going to be there for short term. It has to be for the long term.
So into the long term, you're saying that
It has to percolate down. It has to be, right at every level of the organization.
If there's something that you can say, if you were to point out one or two things that we need at least in the next 1 year or so.
Okay, so as Roopa said, you can't better anything till you measure something, and that's where is very critical that the BRSR is probably the first step, and it's a very important step. It's a very laudable step, and once we have started with that step, we will only go upwards. So I think we will catch up much faster than the rest of the world on this.
Your thoughts quickly, just I think last concluding.
No, I will just summarize it in 2 words. One is awareness, and second is measure it. Right? We will see these 2 things will make a lot of difference.
No, I agree what Shelja and what others have said. I think it is important. So there are 2 things: awareness and execution. So how we are looking into in terms of metrics for everything, like how the process will be improved, productivity per employee, process, the cost taken per of transaction, cost of acquisition of client. These are short term as well as long term. On these metrics, it will translate into the ultimate goal for the organization is the financial sustainability, because ESG will lead to the sustainability of organization as well in some way or sure.
One of the things when we discuss ESG or sustainability is that we never discuss short term. We discuss slightly longer term, because the very nature of the topic is such that the impact has to come over a sustained period of a longer term basis. So the horizon cannot be what benefit I will get this quarter or over the next 3 quarters. It has to be what benefit I will get over the next 5 years, at least the very minimum. That was number 1. Number 2, I believe for getting the benefit of this, it must be integrated today, both in our strategy for improving revenue as well as for reducing risk. in across businesses. There are two approaches which we can take in sustainability. Either you develop products, innovative products that can have a revenue uplift using ESG linked attributes, or you use that to reduce your risk and reduce your cost, improve efficiencies. All these three things can be impacted by appropriate use of data across these things, because today there is data available which helps in formulation of business policies and identifying new opportunities arising because of the climate change issues. There is data available for risk mitigation, because there are agencies which have started putting together this data. We can identify which are areas, like a colleague mentioned, which are sensitive to climate change much more than certain other areas, which are certain populations which are more exposed to climate change. So there is data available for risk reduction as well. Certain industries which are more susceptible to climate change, so you avoid those industry exposures. So that, and then efficiency improvement in operations, which we discussed very many times before, how digitization can improve the value per client.
Yeah. Yeah. I'll try to keep it crisp because I think a lot of points have been covered by my fellow panelists. But I think if you ask me the biggest factor to make sustainability sustainable, it's about changing your culture and DNA. I think that's what gets you going.
So I would like to put it across in towards that we will have to make sure that the sustainability awareness should also be used to factor the future designs. Everything that we are designing for the future, sustainability as a dimension needs to be there. The second piece that I also wanted to probably take opportunities, one of the things that we are looking at paperless as one of the forms of sustainability. While we were all talking about the processes going paperless, data being translated paperless, I think one of the initiatives on the other table, which is the currency going paperless, this is also a sustainable initiative. I think is taken at the national level, where maybe 10 years down the line we will not see too much of physical currency and it's all be digital currency. So this will be long journeys. It won't happen in a few medium term or a short term periods that we are looking at. But I think once we get this thought process right, we'll be able to do a good job as a.
It took less than a decade for us to move from a situation where it took days for a check to be realized to just carrying a mobile phone to a supermarket.
You are right. So I can also tell you, because I am a practitioner in this space, I remember that in 2020 October we celebrated 1 billion UPI transactions. Today we are at 8 billion, and I think by 2025 we will be at 30 billion transactions a month.
So we never know this. So Suhail, last to conclude.
I think everything is said. Only one thing, I think we need to bring down this conversation, percolate down. Today is very, very much a boardroom and at senior level leadership discussion. How can this has to come now to operating managers level, where this, these KPIs have to go through at that level, the way people are measured, the way people are, I think it needs to come to that level, so that you start seeing fundamental action around the organization in the operating teams, not just at a reporting and at an executive leadership point.
Same as inclusion. So it's inclusion in the organization itself.
So I think we've got more or less the thing. I think perhaps it all leads to maybe at the operational level, operational manager level, wonder if there should be a KRA around this. So that you need to focus on this as well. Well, I think all the points which are there, I think awareness, measurement, how we need to increase revenues, reduce risk, and at the same time also ensure that there is a change of culture and also the DNA, which you also emphasized on the point. So I think enough thoughts to, I think, ruminate on, hopefully.